Welcome back to Markets Today. We are having a conversation on growth enterprise market segment at the NSE. And to have this conversation, I am joined by Caleb Mugendi from Nabo Capital. Karibu sana, Caleb.
Thank you.
Excellent. What do you make of the market movements today, now that you are very familiar with it?
Sure. Today was quite a quiet day, I would say. Not much movement. We had the main movers in terms of turnover, Safaricom, Equity, and the like. Not much movement though. It was quite a quiet Monday. So a lot of share prices, or at least the main counters, closed close to their Friday closing prices.
Yeah.
So not a lot of activity. As you know, again, in the equities market, also affected by other factors like I would say a lot of investors have also shifted focus to the just concluded IFB bond. So they're trying to get the liquidity for that right now.
I saw the gem segment from Africa was topping the charts at 9% up. I also saw Cabasid making it into the list of the gainers.
Yeah.
What's attracting investors to these small stocks?
Well, I'll say also you have to look at the volume. Home Africa is still, I'll say almost like a penny stock. So a few shares can really move the price, especially if there's a local interest or local retail investors moving and just trading amongst themselves. Cabasid though is a bit different. Having it come into the top gainers means that more or less some more interest has come out into that sector and that stock.
Yeah. I know perhaps we'll have a better conversation about Cabasid later. But for now, would you perhaps give us an understanding of why it's attracting so much activity? Where is the interest coming from?
It's not a stock that we actively follow, given again its liquidity. So in terms of institutional interest, there's not a lot of interest in that stock. So most likely, as you know, we're also gearing towards the release of full year 2021 results. So it could be just local investors, retail investors trading amongst themselves in anticipation of better than expected earnings.
Fair enough. Any stocks that stood out for you?
Again, the banking sector still remains attractive as we're getting up for earnings season come next month. So we do expect a lot of banks to, first of all, to announce record profits and also to announce back to dividend payments. So that's a sector that we are actively monitoring. Safaricom has also been in the headlines of late. Sometime last week when we saw that Ethiopia, the unrest is cooling down a bit. So we saw a sort of a relief rally in that stock. So those are the main ones that we are looking at. Also EABL, following its release of earnings that were better than expected. And also given that we have come out of the pandemic lockdowns and shutdowns, and also this being an election year, we do expect that they'll have good volume sales this year.
People drink more in an election year. We'll come back to that. Today I'm more interested in the gems segment and how it can be leveraged to help the SMEs raise capital for their businesses. Yeah. Is it serving the intended purpose?
Well, you can look at it in one way, given that the idea is a good idea. The structures that the NSE put in place for small and medium-sized enterprises to come and list, the leeway, it's much easier to list on the gems segment than it is to list on the main segment, for instance. So the idea was born out of a good need, or it was a good idea to bring more companies into the market. I think when the gems was started in around 2013 or so, they had foreseen possibly 3 companies listing per year. So given we're already in 2022, that's almost 10 years. So we expected almost close to 30 companies to have been listed by now, but you see that has not been the case. So there is a lot that we can delve into to see why exactly is it not reaching maybe the intended purpose? Is it not serving these SMEs? What is their main, they're not getting what they really want out of listing.
There are 5 counters in the GEM segment, and well, at least one of them is, I don't know, I think suspended. What do you make of the companies that are there? Are they benefiting from this opportunity? Can you observe, is there observable growth coming out of their being listed?
Well, maybe for some companies, we had Nairobi Business Ventures, Home Africa, I think Atlas that was delisted, part of the ones that was delisted. So look at these companies. We can acknowledge that their profile has been raised a bit by listing on the bourse. More investors, more analysis on, and more exposure to the investing public. However, if you also look at, let's say, maybe I can take Home Africa for instance. Given its share price, a listing was I think above 3 shillings, and now where it's trading at, you see, investors have actually lost a lot of shareholder wealth and value. So that might be one of the deterrents by retail investors to come into this market, you know, during these listings in the GEM segment. We do have some companies. If you look at maybe Nairobi Business Ventures, it was not necessarily delisted but suspended for some time, to allow for the takeover to occur. So you see, even after that takeover, you see the company has even shifted gears from what it actually its main or core business of you know, selling shoes and the like, to becoming more like an investment company. So some of these other counters, Flame Tree, you know, some of these counters, they're known. The profile has improved from listing. They're a bit more known, the brands that we can at least identify following the listing. But again, you also need to ask yourself, or from the company's perspective, were they able to achieve their goals after they listed? A lot of these companies came into the market to try and get capital, to fund their growth strategies, to fund their business goals, their medium long-term plans. So has this actually been actualized?
So it's a conversation best had with each company separately.
Separately, but looking at it also maybe just from a top view kind of approach. A lot of these companies are thinly traded, so there's a bit of spark once they do list, but after that it kind of falls off. So unless they also come then to the market with something else, not only equity, maybe they also wanted to raise maybe debt, commercial paper debt, or a bond, then the fact that they are listed can actually assist them.
Can arouse interest.
Yeah.
I'm wondering, Caleb, if you are running an SME somewhere in Nairobi and you are told there is the GEM segment at the market, go for it, get some money, get the profile you're talking about, would you do so?
Again, there are a lot of factors to consider.
They hold a lot of them ceteris paribus.
First of all, maybe we can go through the requirements. Some of them at the top of my head of listing at the GEM segment. You know, you need like 10 million shillings in capital. You need to be a public company. you need at least like 100,000 shares. You need, I think 15% of these shares must be free float. So you must offer at least 15% to the public. You need a board of directors, around 5, I think 5 or 6.
Assuming all these have been fulfilled.
So all these, if I do have all these, and I do have a compelling business case, I have a compelling growth strategy that I need funding for, or that I foresee myself and my company, in order to fund this growth, will need public participation to come in and help me drive forward my growth, then I will list. Again, another issue is the listing process is not immediate, so it does take some time. So it is more or less a long-term goal
Than an immediate,
goal.
Action.
Yeah.
All right. In what ways can we have the segment as a place where SMEs can just go, assuming you are an SME director as well, to get capital for businesses in the same fashion?
Mm-hmm. Well, as you said, I'll come to the market and try to sell some of my, at least the 15% of my shareholding to the general public, hoping that they will take up, believe my growth story, my expansion plans, and believe that I can achieve on them. So during this process, there's a lot that goes into it, because I also have to value the company, or my company as it is right now, before listing. And that price really has an effect on how the investing public might perceive or might view it. So if you go to someone, or let's say a retail investor, and possibly you might have the issue of mispricing. So usually how it runs is you get a transaction advisor to try and build your book of front load to private placements, try and build up the book by going to institutions, private investors who can take up large amounts of the subscription before it gets to the general market. So if you look at then the pricing, the way that the shares will be priced at during that process, then it also has to make a bit of sense for me as a retail investor. Again, given you know what has been happening at the gems market segment, given the large erosion of shareholder value. So I, as a retail investor, I might not perceive this company maybe to be worth X amount, of which is the listing price, if it's not properly communicated, properly marketed. Actually, also to list on the gems, you don't necessarily have to be profitable, but you do have to at least be solvent. So
say that again. I like the sound of that. You don't have to be profitable, or you have to be solvent.
Yes, you have to be solvent. So basically, your liabilities should not exceed your equity capital. And assets. So you don't necessarily have to be making profits at the current when you're going to list, but at least you see you have to also communicate a strategy towards profitability at the end of the day.
Yeah.
So I, as an investor looking at it, if the company is not profitable, maybe the strategy is not communicated well enough, I'm not buying into the strategy, then I also will not come into and give them funds.
Yeah. Interesting. I think I'll want to come back to it, because I still want to know from you how smaller businesses can access the market in a better way, and raise funds from there. And that's, I know you've already talked about the regulatory framework and perhaps what is required of a company before it lists. You've talked of some of the things that are waived, like what you've said. The profitability is not a must. What is important is solvency and a proper strategy towards profitability. But I still want to know, are there structural issues, are there policy issues that we need to better or to make work for us so that the market can be used to raise funds by SMEs? Well, when we come back, that's the conversation. Stay tuned.